Hello traders, Jason here with SwingHigh.com. It is Monday, February 22nd, 2010, and this is your post-market analysis. I just got back from Toronto yesterday. I was up there competing for Penn State in the 2010 Rotman International Trading Competition, which it was a great time. The competition was really cool and a lot of fun. And the city was cool too. I was happy to see Toronto for the first time, and hopefully I get to go back next year. Overall, the team placed 14th out of 42, so it's not too bad. But yeah, that's that. I had a great experience there. So my last video was on Tuesday, I think, and well, let's get back to it. Here we are today with a pretty flat day. Kinda. The S&P up a little bit, the Dow down a little bit, the NASDAQ down about 0.2%, the financials up 1.25%, big move on them, the Russell's up 0.36%, so definitely some relative strength in the financials and Russells today. The dollar and gold both dropping, decent sized drops on them, but nothing too significant. So here we are on the daily chart of SPY. It looks like I missed most of this move, most of this breakout. In hindsight, when I picked up some UPRO here on this potential reversal candle, I was right. I could have had a nice 17 points there. Unfortunately, I got stopped out, I think, right here. So that sucks. I missed it, but I was right there when I called a bounce. Now, I did not also expect us to go this high, so this is more bullish than I expected. However, this being a bull flag breakout, I'm going to zoom out a little bit. Here we have our rising wedge formation going up into the right here. We struggled to get off the bottom line, broke down on hard volume, came down here, put in a bull flag formation, trading in this tight range pullback, broke out of that bull flag, and now we've had a pretty nice run here, and we're sitting into a resistance area in this gap back here. All of this breakout was on low volume though, so I'm a little hesitant to get into it, especially now after this extended run. I need to see some sort of consolidation or pattern set up before I make any new trades, and we'll go from there once we see something. After today, we pulled back pretty much exactly to the 50-period moving average. You can see this very light blue line here coming across. That's acting as support here on SPY, which is the S&P 500 tracking ETF. Sorry I didn't mention that earlier. So right now we're sitting pretty much at support around 111 and that 50-period moving average. If we break below that, this could be a rollover here. Not a strong reversal pattern, really, but we do have some support to break through, and I could see that happening. Obviously, the markets could not get above resistance here at 111.50 area. We'll see if they can consolidate and break above them sometime in the future. Right now, today's move, although it was, well, it was very flat, very low volume. The internals were very indecisive. Here's the action today. Basically, put in a symmetrical triangle right here and broke out of that. This is pretty rough. Broke out of that, traded up to resistance at 111.50 and pulled back at the end of the day, finding support at 111. Here's the VIX today. It was up slightly and pulled back and finished down 0.3%. On the daily chart, we have a huge pullback on the VIX. As you can see, it's almost a double top formation and a confirmed breakdown here. Either way, it's a lower swing high that is bearish for the VIX, but we are at support here, sort of, at 20. The TRIN was obviously very neutral today, chopping around 1 for most of the session. The TRIN Q, similar picture, hanging out in neutral range all day. The tick was also fairly neutral. Watch your economics calendar or your earnings dates as well, and be careful trading out there tomorrow as there's some big news. Thanks for being a part of SwingHigh.com.